This video is about support levels for stocks. On my screen here, I have a chart for Apple. This is a stock chart and it's showing the price activity each day. Each of these bars represents one day of price activity. And sometimes you'll hear the terminology support or resistance, and there are different levels that you can see on stock charts. And I will talk in this video about how you can find the support levels and what they might represent. So a support level, which is also referred to as a swing low, is demonstrated by price activity where there is a valley and it's at the very bottom of the valley. And it's any time that the two price bars on either side of the low point have a higher low. And it's a little bit hard to keep track of that terminology there, but you'll notice this price bar has the lowest price of any of these nearby price bars. And you know it because the price bar after it has a low that's higher, and the price bar before it has a low that's higher. Therefore, by definition, this is a support level right here. Now, this one is a pretty pronounced one. You can see it's a nice clean V shape of price right there. But there are tons of potential support levels by that definition. Here's another one right here. You can see the low of this bar and the low of this bar are both above the low of this bar. So technically, this is also a support level. The same is true here. Down here, it's a little muddier, but you can tell if you look closely that this bar has a higher low than this one. And the same is true here. So this right here is a support level. Now, sometimes you'll see multiple bars that are all in the general same vicinity as far as their low points go. And that's what you're looking for when you're looking for a support. You're looking for not necessarily multiple price bars, but you're looking for the lowest price point in any given candle and seeing it stand out relative to the other nearby candles. So this is a standout support level, but this also is one. You can see these lows are kind of distinct from the lows of the other price bars around it. So it kind of comes down in a V shape here. This one, again, it has 3 bars, so it lasts longer. The support level, carries over through 3 periods here, 3 days, but it still would be considered a support level. Why do support levels matter? Well, sometimes they matter because sometimes they can be a reflection of where there are buyers ready to buy that given stock. There's evidence that people bought the stock, in this example right here, without letting the price go any lower. So each time the price came down to this level right here, someone was there to buy the stock. Enough people were there to buy the stock to not allow it to go any lower in price. There was enough demand at that price level to push the price back up. In this case, it took a few days, but it eventually went back up. And you look here, and right here, there was enough buyers right here to provide the demand needed to cause the price to go back up. It didn't go any lower. And so the theory behind support levels is that if later the price ends up coming back to that same level where there was a prior support, there's a chance that there could be buyers at that level again. The same people who are interested in buying right here may also be ready to buy at that price if it comes there again. And not only that, but since there is a perception by some investors in the market that support levels are important, that alone causes more investors to get active if a price comes back down to a prior support. And so it could offer an opportunity to profit if you make trades where you buy right above a support level. And this is an example right here. The price, this is a very pronounced support level right here. The price went up, it came back down, and the idea here is you could buy this stock, if this right here is the low, you could buy this stock if it gets close to that low. And there's some discretion involved there. It's arbitrary what close means exactly. And that's part of the trade-off every investor faces who considers buying at or above support. Where exactly do you place that order? But the idea is you can buy a bit above support, and maybe the odds are in your favor that the stock price will go up from there. So that's a support level. The more pronounced it is, might make it have higher odds of success. So these support levels, it's a little muddy in here. This isn't like just one giant V shape right here. This, at least to my eye, looks like a pretty clear-cut giant V shape. This looks like a standout support level to me. It doesn't mean, if you trade support levels, it does not mean that you're always going to get a winning trade. That's for sure. There's no trading or investing strategy that has perfect odds of success. So as to what are the odds of success if you make trades against support, that is up for debate. And there's different ways of measuring that, and different odds depending on exactly how those trades are made. At least as far as looking back at historical support level trade setups, the odds vary depending on exactly how you set up that trade or investment. Now here, this one, it bounced off this support level right here. This could be that it bounced because of the support. It could be that it bounced for a totally separate reason. It could be a combination of reasons that it bounced. But it doesn't always work out. And as you see, I'll drag this over. The price went up. If you happen to do an investment where you bought at support and then the price went up and you locked in the profit right here, that may have been a successful trade. But if you were buying it for a longer term position, you can see that things got dicey just a bit later, and this support level did not hold up when it came back down over here. That's what support levels are. If you have any questions about support levels with stocks or options, or if you have any questions in general about trading or investing, you could always reach out to us. Our email address is support@stockmarketguides.com.